We've seen in 2020 that supply chains, bottlenecks, etc., have moved up zinc, they've moved up copper, aluminum, they've moved up wheat and corn and oil, many commodities, lumber, obviously. Many of these commodities have gone through some parabolic moves. Silver, not so much. And so when I look at the fact that it is a fairly a quasi-industrial metal, I think it's time to go on a substantial rally as almost inevitable. At some point, you will have, and obviously you saw uranium in the last little bit here. So I think silver, for it to go up substantially, would not surprise me. It wouldn't move as a monetary metal. It will move as an industrial, as a commodity, like you say. But I think that its window to do that is dwindling, because once the Fed really announces that inflation is under control, and once the ports become less clogged, etc., this is going to be playing down on commodity prices. So just keep that in mind. What I think really does play in favor of silver is the fact that the United States and China are not collaborating. They're literally at war with each other on many fronts. One of those fronts being natural resources. The Chinese are buying and hedging prices for commodities 10 years into the future. They're buying supplies 10 years into the future. Silver is very important to them. And I think that dynamic, the geopolitical dynamic for commodities will be important in the coming decade, because China is moving forward with unbelievable construction projects, many new cities that they're building, new roads, they're building infrastructure and ports and bridges, etc., in Africa, where they're putting in billions of dollars. I think silver is critical to them. And as you know, technology hasn't solved the exploration of gold and silver as it has with like natural gas or oil. The supply for both of these has been dwindling, depleting. We are in a process where we're seeing a decline of about 50% in the capacity of gold between 2018 and 2024. So you are seeing that. Some people call it peak gold, but it's only going to be peak gold if they can't figure it out. But for sure, we're seeing a lot of supply issues with gold. Silver is even more interesting, because whereas gold is always above ground in jewelry and other sorts of coins and bars, etc., silver is, because of its industrial capacities, it is dwindling for real. It's not coming back. Mm-hmm. So it has a demand and supply problem. And as you know, it's so cheap that it's mostly a byproduct. So you have that as well. And that plays into how volatile it can be. I think we've seen that on a monetary side of things, where it's you and I and a few 100,000 bullion traders trying to hoard silver altogether, like we saw in January. I think that doesn't drive up the price of silver on the COMEX. It drives it up in a negative fashion for silver stackers, because they end up going to the dealer. The dealer's out of bullion. If you want to source the bullion, it's a huge premium. So that's not what you want to see, right? You want to see the Wall Street price of silver go up so that you can either sell it high or trade it, and that we haven't seen. And I think for that to happen, the commodity desks at JP and at Goldman and Barclays and all these investment banks need to understand the fundamentals of supply and demand. That's what they're going to care about. They're going to care about silver as a commodity. And when that becomes an issue, like it has with other commodities, they're going to pile into those just as they've done with other ones. We just don't have a timeline on that or any sort of event. But from a risk reward perspective, silver has done something pretty incredible. It trades in a range between 22.5 and 29.5 for over a year. And it just tested that support at 22.5 and did not break. We're $24 an ounce right now as we do this interview or thereabouts. And so it successfully held support. For a speculator, this is something that they can immediately look into in terms of the risk reward. For me, it gives me confirmation that if silver goes towards the resistance again at 29, and I see that the dollar is weak, going to around 90 on the DXY, there's an incredible trade there with very high reward and very little risk. And the trade is from 29 to 36. If I see that happening, if I see a combination of silver hitting 29 and the dollar going on the DXY to about 90, I will use margin and leverage with options on silver where I see it go to about 36. I might even go on leverage on silver mining stocks. This is going to be something that I look to do something aggressive with. I think it's a very high reward, very low risk, asymmetric bet.
Yeah, when you